Are we now on the brink of a massive movement? Donald Trump is making the next statements regarding tariffs, which are now super relevant for the markets and we absolutely need to look at. He also warns the Federal Reserve again that they absolutely need to lower the interest rates. Tom Lee makes a statement regarding this, saying that in the next 7 days, there is an ultimate window of opportunity to take massive profits here in the stock markets, in the Bitcoin markets, crypto markets, in the global financial markets. This all has to do with the tariffs. We now have exactly 7 days until the 2nd April, and we need to take a very close look at this now. Why Tom Lee is so adamant about this date, why he also assumes here that the bottom of the current Bitcoin crash or setback is already in, and why the new statements from Donald Trump regarding this are so relevant. But before we look at that, here is my absolute recommendation for you. Be sure to check out CoinTracking, the best tax tool in the Bitcoin and crypto market. Here you can easily track all your trades, generate tax reports. You can see which coins are tax-free and which are not. You can also use it as a portfolio tracking tool. And with the code, there's a discount if you sign up for a pro account here. But you can test it completely free of charge first. I'll put a link to CoinTracking below for you. And now things are really taking off here. It's really back and forth right now. And every day there are new announcements from Donald Trump. He now says here, President Trump announces that he may grant tariff relief to many countries. And when he said that, it was again here, positive message for the market. He also says that more tariffs will be introduced in the coming days. These include additional tariffs on cars, lumber, and with chips. With chips, let's fucking go. Yes, we definitely see new statements from Donald Trump about tariffs here every day. Every time, I always tell you this, when there are positive tariff news here, it's good for the market. If there are negative tariff news here, it tends to be more negative for the market. In the long term, it doesn't matter at all, but in the short term, it currently affects the markets here. And now we're going to watch the clip where he once again puts pressure on the Federal Reserve. Or at least here, he says he wishes for lower interest rates. And that would be very, very positive for the global financial markets, for Bitcoin, for all risk assets. We are currently in a risk-off sentiment. That could change relatively quickly. Firstly, with what Donald Trump is demanding here. And secondly, with the statement that will be made here later. Tom Lee makes with the 7-day time window that is still open here, where you can potentially still capture massive gains. So he doesn't say it word for word, but that's what you can take from it, from the statement. But first, let's see what Donald Trump has to say.
I'd like to see the Fed lower interest rates. That's just my opinion, because things are coming down. We have inflation under control. Tremendous amounts of money will be soon coming in from tariffs, which is about time that we were able to partake. We've been ripped off by every country on that basis, and it's about time.
So he says here, he wants the Federal Reserve to lower the interest rates. And there have always been recent conflicts between Jerome Powell, the Fed president, so the head of the central bank here, and Donald Trump. Then Jerome Powell fired back at Donald Trump. Then Donald Trump fired back at Jerome Powell. Then Jerome Powell fired back at Donald Trump again. It just kept going on like that, back and forth. Now Donald Trump is firing back at Jerome Powell again. And he justifies it here by saying, hey, folks, we have inflation under control. Inflation is declining. That would be the first sign that the Fed should lower the interest rates here. The second point is that the tariffs will bring a massive influx of money into the USA. Well, I'm not as optimistic as Donald Trump, because tariffs are also inflationary. That's something that needs to be mentioned as well. Donald Trump now says this will bring massive money into the USA. Yes, that's true. But tariffs are indeed also inflationary. That means if you impose a tariff on any goods, and of course, he now says that potentially tariffs will be suspended, and so on. But there are tariffs. And when tariffs are imposed, it also means that products become more expensive because the production costs might become more expensive. Either you have to produce it more expensively domestically or import it more expensively from abroad. And that means rising prices because production costs are going up. This has to be passed on to the end consumer. That's why tariffs are indeed quite inflationary. And regarding inflation, it's true that it is potentially declining at the moment, but so that can also change very, very quickly at any time and so on. So I wouldn't say that the inflation issue is completely resolved. Jerome Powell also talked about stagflation at the Fed meeting. So the potential for a stagnating economy along with inflation is certainly not unrealistic. And that's a scenario that a lot of people potentially consider. And that's why Jerome Powell isn't entirely wrong here if you don't just lower the interest rates to 0 or something like that. If then here, Jerome Powell doesn't follow Donald Trump's conclusions, then it could also be that Donald Trump plays the Joker even more and uses confusion tactics to fully drift the USA into a recession. Donald Trump never quite officially addresses it, but it's really about refinancing the USA, meaning taking on new debt at lower interest rates, because $9 trillion need to be refinanced this year, so $9 trillion. New debts. And then you simply need low interest rates, otherwise you'll end up paying through the nose. He says that we've been getting screwed for a long time without tariffs, and now it's time for other countries to pay up, and so on. Those are interesting statements. In fact, it still seems to me that Jerome Powell doesn't care about what Donald Trump is saying. And Jerome Powell still seems to be relatively independent, but that could change quite quickly at the next central bank meeting. And now we actually have the 2nd, April, which is now a very crucial date. That's exactly 7 days from now. And now we're looking at the statements from Tom Lee, the top analyst from Wall Street, who has some very, very exciting takes. And as you can gather from the clip here, he certainly assumes that this is still a very, very good moment to make gains. Of course, this is not financial advice or anything like that, what you do with your money, what you do with your money. And you shouldn't listen to me, but you should trust your own decision-making ability, and not just anyone. Don't follow someone who says something on TV or someone who says something on YouTube or anything like that. We listen to the whole thing, why the next 7 days are so relevant, why the 2nd April is so relevant, and why, according to Tom Lee, the bottom is now in.
Now let's bring in FundStrat's managing partner and head of research, Tom Lee, a CNBC contributor. It's good to have you. What do you make of this report? I mean, part of the uncertainty of all of this has been the, iron fist, maybe olive branch. Back to the iron fist, maybe an olive branch. What do you make of it?
Well, I think markets should interpret it positively, because I think when we talk to our clients, many are viewing tariffs as punitive, potentially protectionist, and driving several economies into recession. This sounds like that we could actually have a positive case scenario with these tariffs, one that's either mutually agreed upon or if it's reciprocal, but maybe a good deal for businesses. And I think it would set the stage for a much bigger recovery rally than we expect.
Afterwards, right?
Yes,
I mean, the problem is the paralysis, if you will, between now and then. Like, what are we supposed to do over the next 10 days?
That's the dilemma, right? Because we still have 8 trading days till April 2nd. Most investors are getting just nauseous from the volatility, so they want to throw in the towel. But we also know that markets will bottom, or have historically bottomed, before the event actually happens. The best example is the Cuban Missile Crisis, 1962. That was a 12.
It should be noted that the interview was recorded here last Friday, so the days he mentions don't quite match the new trading days or new days or something like that. As he said, there are now 7 days left until April 2nd. But he says that we generally have a sentiment of uncertainty. We have a defensive stance in the market, but the tariffs could trigger a very, very positive scenario. In any case, he expects a recovery rally, meaning that we will recover everything we've lost and even surpass it. That means now it's kind of like art for health. I already mentioned in the video before last, art for health assumes that the next price target is 110,000 US dollars. If we break through that, then we will rise to 250,000 US dollars. Tom Lee sees it similarly, that we are now having a recovery rally. He also assumes what his price target is, I believe, 200,000 or 250,000 even for this year. So relatively high, at least 200,000 or something like that. So he has a similar direction in mind as Arthur Hayes. And he assumes that the next 7 days will still be a kind of paralysis state with very, very high volatility. And many investors are just throwing in the towel now, saying, okay, they're not participating, they're getting out of the market. They will only enter the market after the 2nd April. Donald Trump has already announced that the tariffs might not be as severe, as they were supposed to be on the 2nd April, should have been implemented. That means Donald Trump made some kind of bluff or something like that. Tom Lee says that the entire scenario will be good for businesses. It will be good here for the USA, and the recovery rally will be relatively intense. And what I found to be a very, very interesting analysis is that he says, hey, folks, the bottom is already in. We've already seen the bottom. He then refers to some crisis in the 1990s and so on. That's relatively irrelevant. However, he says that the bottom always occurs before the actual event happens, which then kickstarts the recovery rally. That means, in this case, the 2nd of April would be the crucial date. He says, hey, the bottom is already in because historically the bottom has always occurred before any turnaround point or something like that came. That's where all the things are already priced in. That means all the uncertainty and so on, it was all priced in beforehand. And when there is security for the markets again, when there is clarity for the markets again, then the state of paralysis is lifted here. And that's nothing other than the switch from a risk-off sentiment to a risk-on sentiment. Then a lot of capital flows back into the Bitcoin market, into tech stocks, into all the risky assets. Then money might flow out of gold into Bitcoin, or generally from bonds into Bitcoin. I don't necessarily mean from gold to Bitcoin, because gold currently also has very, very good momentum. That's something to watch. But gold is actually more of a typical risk-off asset. And when it shifts to risk-on, people often move to even more speculative assets. There was also a very, very good assessment from Macroscope. He writes something very, very interesting here about gold and Bitcoin. The relationship here should be closely monitored, meaning gold versus Bitcoin. It's about the relationship Gold leads the Bitcoin crowd after all. So we've often seen that gold pumps first, then Bitcoin pumps. This has proven true at several key turning points in recent years. So the relationship has consistently proven itself over the past years. The gold to Bitcoin ratio. First gold pumps, then Bitcoin pumps. These points marked the beginning of a tremendous outperformance of Bitcoin compared to gold and other assets. Regaining and holding the $100,000 mark should prompt traders to watch for a stronger, longer-term movement. Something to keep an eye on, not a prediction. So clearly say, hey, it doesn't have to happen that way. But you should definitely keep an eye on that. Additionally, you should watch global liquidity, which is also potentially rising because QT is ending and QE might potentially start again. And these are all indicators for a very, very bullish and very, very rapid Q2, Q3, Q4 in this year still to come. And now you have to be very careful about when it will break out here, whether the 2nd of April is already the decisive date, or if it will still be after that. There is tension in the market, and then maybe only later, perhaps not until Q3 or Q4. The massive breakout occurs here. I mean, historically speaking, it just fits into the cycles that we now see a massive rally. From the middle of the year to the end of the year, maybe a bit earlier, maybe a bit later, you never know. But that's why the assessment here is very, very interesting. From macroscope, gold is the indicator here and Bitcoin just follows along. And what he also says about the outperformance, that's always the thing, I see it quite similarly. For example, if gold doubles, then Bitcoin sextuples. If gold triples, then Bitcoin increases 10-fold or 12-fold or so. That means we always have a kind of leverage on Bitcoin when we see it in relation to gold. Sure, you can also say the volatility is then also 10 times higher with Bitcoin. And you can also say the drawbacks are 5 times higher or so. Similar to MicroStrategy. You can also hold MicroStrategy. But that's another leverage on Bitcoin. And yes, that's a very, very interesting observation. And we need to keep observing all of this. How will things continue with the tariffs? What does Donald Trump say? Especially, what does Donald Trump do? Does global liquidity change? What is the deal with the gold-Bitcoin ratio? These are various indicators that should definitely be observed. Guys, if you still want to buy Bitcoin, I'll put a link below for you. 21 Bitcoin, how you can buy Bitcoin easily, safely, and simply. Here, with the code, you can get up to 20% off the fees when buying Bitcoin. Definitely check it out. And if you're looking for an optimal way to secure your Bitcoin to the highest degree, then definitely check out TREZOR, the best hardware wallet on the market, where you can easily, safely, and simply protect your Bitcoin from hackers, theft, and other threats. You are completely self-sovereign. Anyone who wants to be serious in the Bitcoin network and truly build wealth for generations, in my opinion, needs a hardware wallet. Be sure to check it out with the code Bitcoin Hotel. You get a 10% discount on the purchase of any TREZOR hardware wallet you order here. See you folks until then. Peace out.